host and your teacher for today. Alright, so today is just going to be a quick one. Today I just want to be explaining the trade that I took yesterday and shared to the Signal group, which was a sell on Xauusd, right? But before I break down why I took down the trade, I want you guys to understand something very important, which is key levels, right? So the way I identify my key level is that I wait for a pattern like this. You can use the line chart to see it much clearly. Let's say you want to take a sell, right? You wait for price to push up, and then you wait for price to push up and then push back down, forming an A shape. Right? If you want to buy, you wait for price to push down and then push up, forming a V shape, right? So anytime I'm looking to sell the market, I want to see this, and anytime I'm looking to buy the market, I want to see this, right? And then all I do is that I wait for price to get all the way to this zone, and then I look to take my entry from there. So if this was a sell trade, I wait for price to go all the way back here, and then I look to take my sell position all the way down here, right? But if it was for a buy position, I'll wait for price to get all the way here, and then I'll wait for price to come back into the zone and look for a buy all the way up, right? It's as simple as that. That is basically how I identify my own key levels on the chart. All right, that's how I identify my key levels on the chart. Let me get rid of this. Yes, remove them. All right, so now let me explain the third key level, right? So there are situations in which price creates this V, signifying price wants to buy. But rather than price coming back into the zone and respecting it and pushing back up, price instead breaks it, right? Price breaks it. So this was the zone. Price was meant to respect the zone and push all the way back up. It was meant to respect it and push all the way back up, but price didn't. Instead, what did price do? Price broke through it, right? So this zone is not invalidated. What we're going to now wait for, we're going to wait for price to push back all the way into this zone and then sell back down, right? This was the exact pattern we got yesterday for the gold sale. So now let's go down to the charts. That was yesterday. That was yesterday, 6th Monday, around 8 a.m. That's when we got the trade. And so as we can see, let me switch over to the line chart. Where is the option to switch over to? Give me a sec. Where was it again? Nope. Is that it? Where do I go back to switch to line chart? This should be it. This should be the option. Line chart. Okay, yeah, I see it here. Line chart. Right. So if you're on the line chart, as you can see, you can clearly see this V right here. This was the V. It formed. And what did price do? Yes, price did come all the way back here, respected it and shot back up. But let's explain why we did not take this trade. Alright. We decided not to take the trade because this trade happened during, it was already past New York session. My trading session of when London session opens, and by 5 p.m. is when New York session opens. So that's my trading range, and this setup occurred during 5 a.m. Our market closed last week pretty early. It closed around 6 p.m. Right. I did take a trade on that Friday, but that is a video for another day. Right. Maybe after the ending of this week, I'll do a weekly breakdown all the trades I took. Right. So as I said before this V shape, pushed up, and then let's mark that out. Price ended up right. This is what happened. As you can see, let's go back to that chart image. Exact same thing. Price broke through it, tested it, and sold back down. Right. But now, knowing your key levels is not just important. You need to also know where and when inside market. When I've explained that, after London session opens by 7 a.m., you can start looking for your entry. But where you enter it. So my key levels are always on the H1 time frame. But for my entries, I always go all the way down to the M1. Alright, so let's go back there. Time after 8. Okay, yeah, this one. Right. So as you can see, price came back and tapped it on 8. It tapped it on 8.45. Right. So let me explain how I look for my entry model. Model reversal pattern. Right. Some other people will know it as invalidation from APA strategy, but all and all, just know how the pattern forms. So this is what you look for a sell. Wait for price to go up, price to come down, price go back up, create a change of character, a change of state in delivery, a market structure shift, whatever you want to call it, and then wait for price to get back to this high of the previous high, wait for price to get in, and then you look to short. It's basically looks like a head and shoulder pattern, right? Left shoulder, head, and right shoulder, and then you look to sell from there, and then you basically highlight it, and then once price gets all the way there, you take your short position. That is how it does. Same thing for if you're looking to buy, price goes down, goes up, goes back down, creates a change of structure, and it comes back down, and then look to buy. That is how the Xauusd reversal pattern works, right? So now if we come back on the charts, as we can see it, what the price do, price pushed up, price came down, price pushed up, price came down, price pushed up, price came down. And if we move this here to the side, it's the exact same shit. It's the exact same thing. I just let me spell that. It's the exact same pattern. Look at this, right, and then look at this. They're the exact same thing, right? Left shoulder, head, right shoulder, and we sell. Everybody has different ways of marking out their entries. Some use the rectangular tool and mark from the beginning of the week to the end, and that is where they want to enter from. Some they mark the entire body, but they mark the entire order block, which is a breaker block, validated. What I like to do, I like to carry my pencil tool, and then from the beginning of the week I highlight, I drag it, and that's around my entry, because I like to get sniper entries. And I place my entry right down there, and my SL at the week right there, right? That's where I place my entry. And where was I going to be targeting? I was going to be targeting the next low, which is somewhere right around here. I took my that was a 1 to 15 here. At my TP was somewhere here in the higher time frame. That's where I ended up getting my TP, and as you can see, instead of price sniped it, it was a clear movement to the downside. So yeah guys, this was the trade that we took yesterday in the signal group, Monday 6th. This was the trade, and as you can see, even that time that I told you we didn't want to take it, as you can see, it gave the clean buy setup for it. Left shoulder, head, and then right shoulder, and price pushed all the way up. But that is a story for another day. Well, I'm glad to say that I hope this video explained how we took the entry, and we're currently on another trade right now, currently on another trade on gold. I've shared it to the signal group. So you go, we're waiting for price to get here. You can see the same Quasimodo pattern. Wait for price to come and tap in. This is on 1:13. So yeah, I hope this video was educative.